Hi, John here with West Real Estate Group, where we love to educate our clients about the ins and outs of buying, selling, and home ownership here in the Treasure Valley. Now, with the tax filing deadline being extended from April 15th to July 15th this year, we know you have lots of tax questions. So we're here today at Jack Trent and Company's office to ask our CPA, Jack Trent, your questions. Also, if you're thinking about selling a home this year, we have some great information in this video about how you can possibly write off your selling expenses. Now, this video is a little bit on the longer side, so you can see the questions we asked Jack below in the comments and jump right to that part in the video. Let's get right into the interview and ask Jack your questions. So one of the big write-offs that you might want to consider if you're thinking about selling this year is selling costs. And when someone's thinking about selling their home, can they write off any of the expenses like advertising, the realtor fee, title fee, legal fees?
Yep, they can write off every dollar around that house. So let's go back to the two of the last 5 years. If they're going to have they know that, hey, I'm going to make $400,000. I'm going to be able to sell this home for $1 million, and I only paid $300,000 for it. So they've got to still have a pretty large capital gain. Then we're looking back at every dollar that they put into the home when they sell it. Now they have 90 days, a 90-day window. When they're doing improvements, they're going to paint, they're going to throw on a new roof. I mean, all those could have tens of thousands of dollars in cost, and you can deduct all that. Of course, realtor fees, fully deductible. All the closing costs on the closing statement, all those are part of your basis, which we then get to write off.
So with this, then one of the ways that we can track the expenses someone spends is that closing escrow fee, right? At the very end, they get the the closing statement. They can see all the fees that were basically associated with that, and that's good enough for tax write-off proof.
And that's what we'll be asking as accountants. We'll be looking for that closing statement.
Okay,
we'll go through all of it. But then you're going to have other out-of-pocket expenses that won't be on that closing statement, like painting. You did some landscaping. You had to do some special repairs on the roof. All those types of expenses.
So then keep receipts of everything that you're spending to help sell, stage.
Ideally, you keep receipts on anything over $1,000, any improvements you make on that home over the lifetime that you've been in the home.
That is a good tip as well. Just keep a receipt for everything you spend over $1,000 to maintain and to
because there are clients in certain hot markets where their home did appreciate over the $250,000 or even $500,000 between a married couple, and they're looking at some pretty big capital gains. So we're looking for every dollar of deduction.
So the second one we're going to talk about is home improvements and repairs, and we kind of talked about that a little bit on the selling costs when it comes to selling your house. You talked about the $1,000 over, any amount over $1,000, keep the receipts for that over the life of the house and ownership. Even if you're not selling that day or that year, still keep those receipts. They can be very helpful. What about home improvements and repairs? Is that the same line of thinking?
Well, you have the 90 days. If you're getting ready to sell a home, you're having to do some significant repairs, like maybe a new floor or painting. Then you want to keep track of all of it. You'll keep track of all of it. If you've done some special landscaping, getting it ready for staging, keep track of all those expenses. Regardless of the dollar amount, we'll want to add that into what we call the basis or closing costs. They won't necessarily be on the closing statement, or they won't be, but we'll be able to take those from you, and you'll be able to write those off as well.
Now, is there a tax rule about making those repairs and or spending that money and then selling within a 90-day window, or is there a time frame in which if I do it now and do it 6 months from now, can I still write it off?
No, it should be within 90 days. Now, if you've listed the home and there's a good faith effort, if you've listed it within 90 days and it's still taking you a little bit longer to sell the home, we're still going to capture those expenses.
So if someone's thinking about selling their home, ideally it would be best to also speak not only with the real estate agent, but also their CPA, yourself, with questions on how to best attack selling from a tax standpoint, for a tax write-off standpoint, kind of having them call you first and or their CPA and discussing what things should be recorded and noted.
Yeah, absolutely.
So those people thinking about selling their homes can benefit from basically the equity that the market provides them to their home. Let's talk about the write-off rules for capital gains and what that means for someone thinking about selling this year.
The rules were actually relatively simple. You're required to live in the home 2 of the last 5 years as your primary residence, and you can write up to you can make a $250,000 capital gains, of which you don't pay any tax on that. If you're married, it'll be double. It'll be $500,000 capital gains. Now, people often think, hey, I'm selling my home for $510. My wife and I are listing the home for $510. Are we going to have some capital gain? No, because you paid a lot more than $10,000, unless you didn't. But you paid a lot more than $10,000 for your home. That's going to be part of the basis. So if you paid $200,000 and you're selling it for $510,000, your potential gain is only $310,000. So, and you're allowed $500,000 capital gain exclusion. So all that's fully tax-free.
In regards to the capital gains, one of the things I think is very interesting, and a lot of people maybe don't relate this with an investment because it's their primary home, but I think it's still part of the reason why real estate or owning real estate is still part of the American dream, because you have this tax shelter, you have this ability to make profit as the market improves over the time and not pay taxes on it. I mean, what kind of income can you?
Oh, it's huge.
Can you do that and not pay taxes on?
Yeah, that's huge. You know, we pick up a lot of clients that move here, relocate from California, Washington, and really all throughout the country. But they'll sell their homes, particularly in California or Seattle area. They'll make a huge premium, a huge profit on their home, and most of that's tax free, which can go into their retirement. So, yeah, it's definitely part of it. And then, you know, I have clients that'll move every several years, taking advantage of that. They'll buy, they'll have a nice capital gain, they won't pay that, and then they go buy another home and do that again.
So you can really build wealth through owning real estate.